We're back. All right, let's get into that conversation that I just intimated before we went on a break, and it starts like this. All right. Now, this is exactly what we do know about Safaricom share price standing. Well, where we do know now that Safaricom has pulled the wealth of the Lucker Bulls to 1 month low after its share shed 124.2 billion shillings in the last 8 days of trading on a price collection. Telecom that closed Monday at 35 shillings and 90 cents, which represented a 3 shillings and 10 cents drop from the all-time high of 39 that they hit on February 25th, sustained for 3 consecutive days to last Wednesday. Now, following the announcement of a surprise interim dividend, which dropped to 37 shillings and 30 cents last Thursday when the Telco finalized on their register in readiness for an interim dividend payout of 45 cents per share, or if you want to put it in monetary form, 18 billion shillings. Alex, let's talk about Safaricom. What would you say was behind the prior rally that actually saw the share jump to 39 shillings, which was their all-time high?
Sorry, Simba. I believe there are a number of factors that were involved.
Yes.
And I think apart from the CBK directive to reduce fees on transactions of about 1,000 shillings, and I think that was probably the only or the major hit to the bottom line of Safaricom. But otherwise, because of the pandemic, people using more data, people using, having Wi-Fi and using more of their phones really jump-started, a lot of much of the top line for Safaricom. But I think also it's just important now that we're talking about the share price. I think it's also important to note that, Safaricom's market capitalization is about half the boss. It's about 1.5 trillion, if I'm not wrong. And the entire market capitalization of the NSE is about 23 billion or maybe 2.5 trillion in Kenya shillings. So I think a number of factors. There's also the issue of the Ethiopian license, that we are still waiting to hear, but there's still confidence that Safaricom is probably going to to be granted that particular license, and that's really going to expand much of the offering and the top line for Safaricom. But of course, just like any other company, we saw that the half-year net profit sometime last year around September had dipped, but that was really because of, the company said that was really because of the CBK directive to waive the fees on the 1,000 bob and below M-Pesa transactions. But otherwise, I think the pandemic really reinforced the fundamentals of the offerings that Safaricom, gives to the consumer market.
Reginald, 39 was their all-time high. I mean, if you look at it, then you will say, wow, that's really good, because at that point they had 61% of the entire wealth at the Bulls, which we do know now has dropped to around 59%. Would you say that Safaricom is making it very hard for international investors to predict what our exact performance of the Bulls is, especially during the COVID-19 pandemic?
Not really, Simba. I think the rally of the Safaricom share price, as much as there's some fundamentals that might be involved,
yes,
we also need to realize just because they're the most liquid counter on the Nairobi Stock Exchange, everyone buys it. So sometimes there might just be demand for the stock, but not really tied to any real fundamentals to actually push the price up that high. Because if you break down to the figures, their voice and data revenue is pretty much flat, if not actually dropping down. And the M-Pesa revenue is also seeming to look like getting to a plateau,
yes,
where it's beginning to start pointing downwards. Because if you look at the growth rates that it has had in the past, then if you look at the last 3 years, the trend has actually been a downward trend in the growth of M-Pesa revenue. Even without looking at 2020, just looking at 2019, 2018, 2017, And I know now definitely 2020 will even be lower because of COVID. So anyone who's getting into Safaricom is the element of, yes, you want exposure to the Kenyan market, or you are in the Kenyan market. Who else can you buy apart from Safaricom? Because we know the banking results are not going to be that good this year. I don't foresee any very good dividend coming from the banks as they announced their results in March and April coming forward. And the real impact of 2020 will be felt in the banks this year because the grace period of provisioning and writing off has gone. So IFRS 9 will kick in 2021. Some of the things that they had restructured most probably might end up still in provisions or actually now being non-performing loans completely. So then you're only left now with EABL and you're left with Safaricom. And we all know EABL has been affected by all these curfew things and people losing jobs and stuff like that. So at the end of the day, you're actually only now left with one stock that you can buy. So now you end up having pent-up demand of money that just wants to look for some risky assets. Foreigners who want to come into emerging markets look at Kenya and think, okay, so here we only have two stocks that we can buy. You can either buy BAT, ABL, or Safaricom, and the darling that they will go to is Safaricom. Knowing that the government is suffering from revenue problem, and the precedent that Safaricom set by spending 60 billion in dividend just highlights the hidden hand of the government in trying to get revenue from their cash cow, which is Safaricom. Because as an economist or as an investment analyst, a company that pays a lot of dividend is a company saying that we've reached growth level. There's nothing else we can do with this money. We are better off just paying out as dividend. And it's an indicator that people should look at when they look at a market, where if you have your top companies just paying huge dividends. For a company like Safaricom, you need to look at how much are they reinvesting in terms of innovation.
Yes.
I get worried for the last 15, 16 years, the only innovation that has come out from these guys is M-Pesa. And I'm thinking, no, that this is a very worrying trend. And actually, even for the country, we've been seeing M-Pesa for the last 10 years. And there's no other innovation that has come up, even from Safaricom or generally from the economy. And then you have that same company paying out 60 billion in dividends. And now they've paid out 18 billion in dividends. Then you wonder how much has gone into improving their infrastructure.
Yes, Reginald, I'm sorry to cut you short. I don't mean to. Yeah. Could that be the reason as to why, again, the share price would drop? Is that the reason why we had a jump from the high of 39 to 35?
Normally, when books close on a dividend,
yes,
the price will correct with the amount of the dividend.
Yes.
Because you see, once there's an interim dividend that has been mentioned, there's demand that comes in, people want to get that dividend. Once the books is closed, there's pretty much no value in holding the stock because you're not going to get a dividend.
Yes.
You are now holding the stock purely for capital gains. And that's where now true fundamentals kick in. So someone says, okay, is it still worth 39 shillings? Is it even worth 35 shillings?
Yes.
As Safaricom itself? Is
yes.
this true fundamentals driving, or is this a technical investors pushing the market up to try and just get a return from it? But if you have to look at their balance sheet, look at the amount they are putting into their infrastructure. It's less than what they're paying out as dividend. Look at the amount they're putting in R&D. It's less than what they're paying out in dividend. So is that a testament that they're saying, hey, we see no other opportunities here in this market. Let's borrow and try out something in Ethiopia.
Yes.
And especially in Ethiopia, if then they do not get the mobile money license and they get only the telecom license, then Ethiopia will not add much value to their top line, to their top revenue, because it's a very highly regulated market. They will not do the funny things that they do here, charge whatever they do, drop calls, you can't complain to anyone. Their prices most probably will be set, salaries will be set, and stuff like that. So if they don't get the mobile money license in Ethiopia, I see that price dropping even way below 30 shillings.
Pretty much. Alex, can you clear for us this conversation? What sort of market reaction do we expect if Safaricom really announces that they've got that license in Ethiopia? Alex, kindly mute your mic.
Oh, sorry. I just wanted to say I don't want to say much on the Ethiopian license. I'm a bit conflicted because, on the corporate side a bit. Yeah. So let me just leave it at that.
Pretty much. All right. Now, Kenya's foreign exchange reserves recorded the biggest drop in this year, according to data from the central bank, decreasing by $246 million in 1 week to $7 million. Yes, the lowest level since March 2018 from 7 million a week earlier. Yes, let me just get those figures right so that now we are up to par with that information. Yes. Now, when we are talking about that, this is going to be the lowest level which Kenya has attained in terms of its foreign reserves. Now, Kenya, which has originally held the largest cash reserves in East Africa, are saying its levels continue to drop in the wake of the COVID-19 pandemic as the shilling faced an uphill task against the dollar, which saw $1 billion drop in the levels from January 2020 to December 2020 to 7.75 billion from 8.76 billion at the start of 2020. Yes, those are the correct figures. Now, the Central Bank of Kenya is however adamant that the reserves are adequate for a cover of 4.52 months of imports cover, slightly above the bank's statutory requirement of at least 4 months of import cover, and narrowly above East Africa Community's requirement of 4.5 months of import cover. In the week that ended on 4th March, the shilling remained stable against the major international currencies, exchanging at 109 shillings and 69 cents per the US dollar on March 4th, compared to 109 and 77 cents per the greenback on February 25th, 2021, with commercial banks' excess reserves standing at 13.5 billion in the week ending 5th March 2020. Good. Let's have a look at that data that is going to support that information this morning in terms of our foreign exchange reserves, and you can actually see that drop right there as we got into the COVID-19 pandemic season. Alex, as expected, isn't it?
Sorry, Simba?
As expected, this drop that we're talking about this morning in terms of foreign reserves.
Sorry, I seem to lose you.
Yes, Alex,
Yes.
can you get me now?
Yep.
Yes. But sort of painting the picture of how now we have lower forex reserves. Is this expected as the country got into the coronavirus pandemic?
I think it's important to first of all start with, the real importance of having, adequate reserves, for Kenya.
Yes.
And especially Kenya is in a very interesting position because, a huge chunk of our debt is foreign debt that is, foreign currency dominated, and therefore our reserves need to be as sufficient and as strong as possible for us to be able to, to respond to any shocks, even when it comes to the repayments of our debt.
Yes.
And I believe right now, I believe you've mentioned it, that the cover is around 4.5 above the statutory one for a 4 months import cover, if I'm not wrong.
Yes.
Yeah, so I think for the central bank, as long as they're above the statutory limit, then for them they'll be okay. But I think the real risk, or there's going to be a really huge risk when it comes to, both the trading, both the trading side of the import side, and number two, the payment of our external debt, if you are not able to maintain adequate foreign exchange reserves.
Reginald, there's some factor there in exactly how we're looking at how the shilling is doing against major international currencies at this point. And now we have a new normal where we're saying, well, at 109 and 69 cents to the dollar, that is quite healthy. But if you go back a couple of months ago, we were not even here. I mean, we were daring this spot that we're calling healthy now. So when you look at it like that, again, how dependent is this number we're talking about here on what has been originally our healthy sectors and industry in the economy? Case in point, the tourism and hospitality sector, which is not bound to come back again anytime soon.
Simba, when we look at the foreign reserves and vis-a-vis the Kenya shilling,
Yes.
so to speak.
Yes.
I think a year or two ago, I pronounced myself and I said this currency is overvalued, and we and it's even at 109, we are still playing around with managing the shilling at 109.
Yes.
But what happens now when the reserves start dropping to the levels they are dropping? It means the central bank might not have enough ammunition to protect the shilling or enough ammunition to manage the shilling. If an all-out attack goes on the shilling, we can easily be at 120, 121 in a matter of weeks.
Yes.
Because then their hands are tied. They do not have enough dollars to flood the market with, so that they can reduce excess Kenya shilling liquidity. So that's problem number one of having reserves where they are. Problem number two is our reserves have been predominantly sustained by borrowing. And that's why now Ukuru has to go and borrow in euros because he has to bulk up the foreign reserves. If you notice, all the time the reserves drop, then there's a loan that comes in. Reserves drop, then there's a loan coming. I'll give you an example. In March, April last year, when the government was running helter-skelter to get money from the World Bank and IMF and all those guys in the name of COVID relief. Yeah, but the truth of the matter, that money had nothing to do with getting money from World Bank and IMF to actually help with COVID. It was actually to help support the shilling, because the shilling was about to implode.
Yes.
Why? Because forex reserves had dropped again to around 4.6, if not also around close to that 4.5 months import cover around March, April.
Yes.
So they had to go get dollars from IMF and World Bank to push it back to 5 months, 6 months import cover. So that loans that were taken from IMF and World Bank in April last year, March, April, there had nothing to do with COVID. They were actually there to support the shilling, and there's an emergency. And now we know there's the 2.4 billion facility that has been negotiated. The money won't come in one chunk, but it will come in bits and pieces throughout the 3-year period. And that facility is predominantly just to also boost reserves and support the shilling. Because without that facility, even Kenyan shilling will not be at 109 right now.
Yes.
So why are our reserves dependent on debt? One, we import more, 3 times what we export. So there's always a higher demand for the dollar.
Yes.
There's no way you can never strengthen in shilling, and you always, on your trade side, you have a higher demand for the dollar than what you are receiving into the country. Secondly, as you said, the tourism sector is as good as dead for another 1 year, 2 years, which was the largest also foreign currency earner, is gone pretty much. Our export side, you've been hearing central bank and even the government saying, oh, exports have been improving and growing. My only worry is that we have been improving in price, but not in quantity.
Yes.
So if the rest of the global economy opens up and the other people who normally supply this tea, coffee, flowers, start supplying, yeah, what will happen to prices globally? The prices will start coming down. But we've not improved our quantity. So those exports will just drop again. We have oil prices that are going up. So shipping costs are going to be expensive. One of our largest import bills is oil itself. So again, the amount of money that is going to be demanded from the import sector is actually going to go up. So that's again pressure on the US dollar and pressure on the reserves. So us having reserves there at the level they are, as much as central bank may put on a brave face, right now they're hoping that they can get an additional 1 B or something, 2 billion in foreign currency to boost those reserves, to give themselves some breathing room. But right now they don't have a breathing room. If we get any major shock, you will see where the true value of the shilling will be.
Pretty much. All right, Alex, clear for us this conversation this morning. Do you share the same sentiment with Reginald that this is likely to continue if indeed they do not get any help in due course?
I completely agree. And again, my major worry is is the external debt.
Yes.
And if the external debt, we continue piling it up and it's dominated in a foreign currency, then that is going to be the real huge test when it comes to the repayment of those loans and whether our foreign exchange reserves are actually adequate. So my biggest worry is actually the repayment of the external debt in the event that there is any form of acceleration, whatnot. Yeah, but I completely agree with Reginald. Yeah.
Pretty much, and there's no better way for us to come to the end of our show this morning. Alex, Reginald, thank you very much for taking your time off your busy schedules to speak to us here this morning on A Business AM.
Thank you, Simba.
All right, it's a good morning.